Hello and welcome to this special stock watch for Go Market Securities presented by me, Evan Lucas. We are going through a volatility in equities that we haven't seen since COVID, but realistically this is completely different to COVID because this is a geopolitical story and it's geopolitically specific in terms of the equities and the positions that this is going to take. With that in mind, please don't forget, have a good read through of all of the disclaimer on screen. Everything in this video is general in nature, none of which relied upon as any form of personal advice. Go Market Securities does not know your personal scenario, nor your personal financial goals, and therefore none of which relied upon as any full advice at all. It is just general in nature only. What we haven't seen yet from the tariffs, and we are going through a period where we are clearly ratcheting to the upside after we've seen a pause now for 90 days on the tariffs that were originally put in for reciprocal rights on Liberation Day for all pretty much nations across the world, barring China. But the one that's catching my attention is pharmaceuticals, because like steel and aluminium, that is still being ring-fenced out, and steel manufacturing, aluminium manufacturing and car autos have not been exempt from the changes, which therefore means that those that are exposed to major manufacturing exports to the US, CSL case in point, still needs to be taken with a massive grain of salt, because it's one of those countries at the moment that you need to understand CSL derives an incredible amount of its revenue from the US. It has huge amounts of input into it, and its major competitor in Baxter has always complained that it has some form of competitive advantage. Now, if you go through the numbers, it's hard to argue with that. It's just a better company. But that doesn't mean it's going to get wrapped up in this. And the 5% decline that we saw when we discussed that pharmaceuticals were going to be not exempt from this needs to be put into consideration. And healthcare is normally an industry that when you see heightened levels of inflation or heightened levels of volatility or what have you, they normally survive it and actually do better. This time around, we're not so sure. And that's why health is an area with the stock-specific view, Pharmaceuticals, another player out there, that may actually not survive the same way it would normally in levels of volatility. These are excellent companies. Let me point that out very, very clearly. CSL, Pharmaceuticals, et al., they are fantastic companies and they export incredible products. But just right now, with all the volatility that's going on, the normal rules probably don't apply. And healthcare, specifically pharmaceuticals, look like being the ones that will see the most amount of pressure as the president ramps up his current tariff regime.